Good evening traders and welcome to Hautrader UK. It's currently Sunday the 12th of July 2020 and the time is 38 minutes past 11 PM UK time. Traders, welcome to the new trading week this week. Hope you're ready for another bombastic week of trading. Let's see how the market plays out, hey. If this is the first time to the channel, traders, I want to welcome you to Hautrader UK. Hope you're going to enjoy this little presentation that I'm just about to put out for you, and hope you like what you see. If you've been here before, traders, from the bottom of my heart, thank you for coming back. Thank you for viewing the content here that I'll put it out. Good, bad and ugly, we place all, well, not all, but we place the majority of our trades on here. The winners, the losers, the break even, just in the hope that it's going to give you some value, something you can learn from there. Now, the reason, somebody's asked me the other day, why do I keep starting with the clock? Well, the reason I start with the clock is because all I want to show you is that these trades are live, okay? And this is an internet clock. It's not something that I can affect. So it's just my way of showing you that this is a live trade. So I'm going to jump, that being said, I'm going to jump across now into the charts just to show you a trade that we've just taken and why we've taken it. So let me just get across into the pair now. So here we are. If you just follow my cursor up to the left hand side of the chart here we are on the 3-month chart of the euro dollar British pound, the euro pound. So let me just go straight down to the daily chart and just point a couple of things out to you now. Now, follow my cursor down here, this blue arrow here, okay? This is where we last got into this pair long, okay? We bought this pair, and if you look at the date just below it, we bought this pair on the 30th of April this year. And the red arrow here shows where we took some profits, okay? And then if you follow my cursor all the way up here, you will have seen, hopefully you will have seen the previous video showing you this trade. Okay, and here on the day of the 26th of June, you can see this other red arrow here, which is where we took our profits. Now, we're still bullish this pair. And one of the things that you have to realize is, although a trade ends, doesn't mean that the bias towards your bias towards your position changes. And we're still bullish the British pound, the euro dollar British pound. So, what we've done is we've found a level of confluence right below this market. Now, since we took our profits just here, you can see the arrow there, we've just watched this market. We've not sat here and watched it religiously, but we've kept an eye on this market because we still know we think this market's going to go higher. All right. Now, price has come down into an area whereby we feel that that moment is about to happen. And if I go down to the 4-hour chart here, it's this bar, and there's where we've entered, that blue bar there. It's this bar here that's prompted me to take this entry in this area. Now, I won't go into why I've got into there, but all I can say to you is you can see the green shaded area. There are some Fibonacci confluences in this area. There is also the fact that we're bullish fundamentally on this area. So there's a number of reasons we've taken the chart, taken the trade. Now, what you can see here is if price even goes that way, this is where we're going to take half of our position off, take profit on half the position and leave the stop where it is, because that then leaves us a 1-to-1 on a 2-to-1 on half of our position. So traders, I'm going to leave it there for now. Let's see how the trade goes. Trading is about following your rules and then doing the same thing and letting the market do its thing. And that's what we're doing here. So hopefully this trade's going to play out again. Where's my target? Well, my target is way up there. There's my take profit. And that's if I remember, I think that's about nearly 400 pips. I don't think it's quite 400 pips. Let me see if I can see exactly what that is. Let's just go into this. And there we go. Okay. So 362 pips. 362 pips away, and let's see how it goes, traders. So traders, thanks for checking out the channel again, and I will catch you all really, really soon. Take care, traders. Good evening traders and welcome to Hautrader UK. It's currently Tuesday the 14th of July 2020 and the time is 19 minutes past 6 p.m. UK time. Traders, hope you're all having a good trading day, and I'm just going to jump straight across into the charts right now just to give you a little trade management education here. All it is, I'm going to jump across straight into the chart and what you have here is the 3-month chart of the Euro Great British Pound. And if you remember, we did a video just the other day showing why we wanted to go long this market. And if I go down to the daily chart, let's go down to the daily chart, and as you can see by the arrow here, it's in this bar that we entered this market. And you can pretty much see the result of this. We're currently long this pair, because if you remember, what I said was I felt that the euro was in a much better condition economically than the British pound. So I expected the euro to actually go up against the British pound, and that's what you're seeing here, guys. So let me go down to the 4-hour chart. Let me just give this a little bit of perspective. Okay, so what has happened since we entered this trade? You can see, if you remember, it was this bar here which I took as a signal to go long, okay? And I went long on this actual bar here. You can see this arrow here which defines somewhere in that 4 hours we actually went long this market. And look at what's happened here, guys. Let's just have a look at what's happened. Okay, let me just get my pip counting tool. Let me just put it on the bottom there. And what's happened is the market has climbed, and this is where price currently sits. And as you can see, we're currently 127 pips up. Okay, now, which is great, which is exactly what we want. Now, what you can see here is this is now trade management, and this is how I manage my trade. Okay, so I set a reminder in there to remind me when price got to that level to take half of my position off. Basically, because what I'm going to be doing, let me just go up the time frame. There's my stop loss, there's my entry. At this point, we're at a 2-to-1 here, okay? So we're going to earn a 2-to-1 on half of the position. Now, should price come back down, the idea behind this is, should price come back down to this level, our stop is still going to be down here, so we won't get taken out. But even if price was to come back down to this level and stop us out, okay, we would still have made a 2-to-1 on half the position. So we can't lose this trade, but by doing it this way, it allows price a little bit of wiggle room, if you like, to come back into this area and hopefully not take us out and then take off in the direction that we're asking for. So that's what we're hoping. So what I have to do now, and I'm going to do this in front of you, is I'm going to take off half of the position. Now, this figure here, 96,369, is the lot size. 96,369 is the lot size. And for me to take off half of the position, I need to make that now. I need to sell, because I'm long, I need to sell half of this position to take off half the position. So effectively what I want to do is take off 48,184. So once I do this, what you'll see is this pound and pence figure half, and you'll also see this figure half as well. So let's protect the position. What do we want to do? We want to modify. So what we want to do, remember we're long, so we now want to sell half of the position. Well, there's the lot size there. So let's go to that position there, and that now becomes 48,184. That leaves us, if once I sell this half of this position, that this figure will half, and as with this. So let's just do that now. And there you go. So what you see here is we've now banked £765. Okay, now I've done this on the live account already. So remember, TradingView is where we do our analysis, but the actual trading style is exactly the same, although the figures aren't. So we have now banked half of that position. We've got half of our position now left in the market. I can now remove this figure here, remove that line here. And now we're in the lap of the gods. Let's see what happens. There's our stop loss up there. The next big level of interest is going to be here, if price gets there, and I'll keep you informed, traders. So thanks very much, and let's see how it goes, guys. So we've banked 127 pips on half of our position. Trade's going well. Catch you all very soon, traders. Take care now. Good evening, traders, and welcome to Hautrader UK. It's currently Thursday, the 3rd of September 2020, and the time is 9:40 p.m. UK time. Traders, I want to welcome you back to the channel. Hope you're still enjoying the content that we're putting out here on YouTube and on Facebook and on Instagram. If you're new to the channel, guys, come across, subscribe to the channel. Feel free to leave a comment if it's constructive, we can have a conversation. If guys, if you've been here before, I want to welcome you back. Welcome back to Hautrader UK, and I hope you're going to enjoy this little presentation that I'm about to put out. Now, traders, I suppose the question that I want to ask you is, when you have a trade complete, whether that trade is for a loss, whether that trade is for a break even, whether that trade is for a profit, is that trade over? And I'm going to give you a little pause there because I want you to think about that. Because is that trade over? Okay. What I actually want to say to you with my trading style, if I get taken out of a trade for whatever reason, even if that's a loss, a profit, or a break even, the trade idea is very rarely over. And what I want to talk to you about here is the importance of having, before you enter any trade, before you put your money on the table, before you click that mouse to say buy or sell or buy, you need to have a trade idea, because you need to see if your plan is playing out as you expect it to play out. And this little presentation that I'm going to go through, we're going to go over a trade which completed a few days ago, actually, but I've been so busy with this channel and talking to people on trading, it's kind of pulled me away. But I want to go over it now just to show you how I trade and the reason that I like to swing trade, because it just gives me the time to make decisions and come back and look at them and all that sort of thing. So I'm going to go over, I've actually been in 2 trades in this pair, and there's an earlier video on my trade on my YouTube account, which is called Hautrader UK. Go and search it, guys. There's a little library building up there of videos that I hope you're going to enjoy. Going back to, we started this channel on New Year's Eve 2020, and boy, has 2020 been a year, hasn't it? And it still ain't over. There's so much to go. There's Brexit. There's the American election. There's the Fed just changed the way they do things as far as inflation is concerned. And many of those people that don't understand what that means are just not in the know. It's a huge decision that's going to affect the world, America's economy especially, but it's going to affect the world economy massively. And it's something that we need to learn about, but we're not going to go into that now. And we still have, and in amongst all of that situation there, we still have COVID-19, supposed COVID-19, everything that's going on there, that we're still not out of the woods yet. And we're now coming in the UK anyway, we're now coming into autumn, which then leads into winter, and then we got the flu season. So guys, buckle down, get your system tight, and get ready to be going into this last half of the month, sharp, because there's going to be opportunities galore. Now let's just jump across into the pair that I'm talking about. I'm going to give you a quick rundown of what's happened this year with this pair. The pair I'm talking about, guys, here is the Euro Dollar British Pound. Okay, now I'm on the 3 monthly chart, and I want to just talk you through what we've done so far and what we're looking at. So to do that, I'm going to need to go down from the 3 monthly chart until I see an area that I can start talking to you about. Let's just have a look. Okay, to weekly chart. Daily chart, let me just have a look. Okay, the daily chart's the one. Now, just follow my cursor. There's an earlier video on this particular trading on my YouTube channel. Go there, guys. Have a look. Take a look at it. It'll help you. Now, look at the bottom of the page here. Okay, and what you'll see is the date is the 30th of April 2020. And what you will then see as I fatten this up is a little blue arrow below the chart. Now that's where I entered this market long. Okay, on the 30th of April, I entered this market long. Now where you see this little red arrow here, I took some profits off on the 1st of May. So the very next day, I took some profits off in this pair long. I let those profits were on half of the position. Now, as I move across to the right here, to the left here, here's my other red arrow. This is where, in this bar here, somewhere in this bar here, was where this trade completed. Now, I can't remember how many pips that was. Let me just try and get a little bit of a guess. It's going to be a guesstimate. If I say let's just say somewhere in this bar, and if I take it up to somewhere in that bar, it was 300 to 400 pips we made in that trade. But look at the time period, guys, from the 30th of April to the 29th of June. That's how long it took that trade to complete. But these are the kind of time spans that I trade. Now, later on in this same pair, now, sorry, let me just back up. The decision that I made down here to go long on the 30th of April was based on a fundamental bias. And that bias was long. We thought that the euro dollar would appreciate against the British pound. And we still do. Okay? But I want to talk to you in a bit more detail about that later on in this conversation. So, pushing forward now, here we are now on the 13th of July. And I'm going to go down to, I think, to the 4-hour chart. Let me just get back there. Yeah, here we are, 13th of July. I'm going to go down to the 4-hour chart. Okay, let me just fatten it up. Now, I actually talked to you on this video. I talked to you about this video on the 13th of July, and the little blue arrow there tells you where I entered long, again, the euro British pound, again for fundamental reasons. Now, what had happened was price had come down into an area of confluence, which I liked, and it was this little red bar here that told me that I wanted to go long. That was my final decider that I wanted to go long. Okay, and look at that entry, guys. We entered in this bar. We're on the 4-hourly chart, and we entered on this bar. And since that day, the entry is just so tight, and we keep picking these levels, and this is the sort of thing I want to show you, how the accuracy of these levels just keeps shining through over and over again with this system. So in this second trade now, and remember we're in the second trade now of this pair, we then up here now you see the red arrow, which is where we took half of our position off yet again. And again, I'm going to do it now. It's a bit random here, but if I remember rightly, it was 140 odd pips. In fact, it was, because it was 120 odd pips of profits on half of our position in this little leg here, and we let the rest of the position run, guys. Now, that half of that trade was taken off in the 14th of July. So now we're from the 12th of July, take half of the position off on the 14th of July, as it says down there at the bottom of the chart. Let me just go back up the time frame a little so now we can get some more perspective. Okay, so there's the two little arrows I was talking about. There's the entry in that daily bar. There's the exit, or the taking half of the position in that other daily bar there. Now, you don't see any other arrows until you get across here, okay? And that is the 1st of September. So from the 13th of July to the 1st of September, guys, we have been long the euro dollar British pound. Now, what you will see here, obviously, is that after taking off half of our position, price moved against us, okay? And earlier on in this video, or this series of videos, I think I said that we made 124 pips on half of our position. That's actually incorrect. What we actually did make was 62 pips on half of our position. And the reason for that is because if you remember, I don't move my stop to break even. Okay, I make a certain amount on half of the position which I take off, and then if we get taken out of that trade, let me put that another way. I make sure that I make a 2-to-1 on half of our position. So if price comes back against me and takes me out, I lose one part of that trade. So that takes me down to a 1-to-1. So in this particular trade, I made 62 pips, which is a 1-to-1 on half of the position, just so you understand. So that's what actually happened. So I just wanted to correct that earlier area in the earlier video that I made when I said I made 124 pips on half of the position. I didn't, I made 62. But what's really important here, guys, what's really, really, really important is even though this trade didn't go to our second targets, we still made money. More importantly, we didn't lose money. And what's really, really important if you're going to become a full-time trader, or any kind of trader for that matter, is that you protect your capital. And the need for you to get to break even is important. Okay, now, as you know, halfway through this year, after back testing, I changed the way that I moved to break even, and this is now the way that I don't do it, and it's been beneficial. So now we're going through a sequence in the markets where the markets are very, very random for us on these higher time frames. The markets are very, very random, and the trends are changing very quickly. So what's happening is I'm finding that I'm not getting to a lot of my second targets. Earlier on in the year, we were doing 600 pips, 400 pips regularly. Okay, but here we are now, down at the 40 pips, the 50 pips, the 60 pips, but we're still making money, traders. And that's really, really important to note, that capital preservation, you've got to stay alive in this game. Okay, and through risk management, okay, and finding decent levels, finding good levels and sticking to your plan, you're going to guarantee that you're in this game for a long time. And it's important that you get that drilled home earlier on in your trading career. Now, so I feel that I've caught up with where we are in this pair up until now. All right, and as you can see, price has now come down, taken us out for 62 pips. All right, what happens next in this pair? What is next? What's going through my mind now as I'm sitting here and looking at this pair? I'm obviously conscious that over a period of time, the British pound has become stronger than the euro, and that wasn't my bias. As you can see, price is in a downtrend as far as this section of the chart is concerned. So as far as this pair is concerned, the British pound is at the moment, and has been for a little bit now, stronger than the euro, which is why we got taken out. However, long term, I still believe fundamentally that the euro is going to appreciate against the British pound. And actually what I'm looking for is another area to potentially, and I use that word potentially because I always say potentially, because if price gets to a level and my bias has changed, then I'm not going to trade that pair. I'm not going to get long if I'm all of a sudden I'm bearish this pair. And that can change on a news announcement. That can change on an interest rate change. It can change on a lot of things. Geopolitical at the moment, there's a lot of stuff going on. So I just want to bring you to this chart, and I just want to break down how I'm now looking at this chart. But what I want you to remember is fundamentally, I am bullish this pair. So I'm looking for this pair to go up. Okay, so let's have a look here. What's the first thing that I do? The first thing that I do, or one of the first things that I do, is I always like to pull a fib. Okay, let me just stop you there before I go into that. These green areas, on my chart you will see green areas like this, and also red areas. The green areas are what we call demand in the market, and demand is an area where you're going to, where I expect there to be buyers. Okay, and the red areas are always above the market, and that's called supply. So we have demand in green and supply in red, and it's supply where I expect to see sellers and push the market down, and demand where I expect there to see buyers. That's a whole nother lesson, guys. We're not going to go too deeply into that. But what I like to do with supply and demand is I like to get confluence in those levels. Let me show you what I'm thinking. Remembering that my bias is bullish, this pair, okay? So this is how I go through my logic. Where's my most recent swing? Now, this swing is very important, okay? This big swing here, and this is from February 2020. This is COVID. This is just before COVID, guys. All the way up to March, and since then, price has corrected, okay? Now, there's a bigger correction in here, which could play out, but I'm keeping it small right now. So, what first comes into my mind is, one of the things that I always do is I always like to pull a Fibonacci retracement and just to see where that lines up, and I use that on the latest swing. So we're still here on the daily chart, okay? Now, what I like about this, okay, is there's my level of demand, which I just mentioned to you. Look what happens, guys. Look at that. You've got the fib retracement of this whole leg from the 30th of April right up until the 29th of June. The 61.8 retracement comes in just above that level. This is the white dashed line, is the 61.8 retracement. The green dashed line, which goes inside that green demand area, is actually just a random Fibonacci retracement area that I've used to allow me a zone in between these areas. Now, I'm going to explain why I like a zone in between the 61.8 and the 67.8. As a retail trader, we have been trained, we have been coached to trade at the 61.8 level. Institutions know that. And if you're an institution and you want to go long or short, in this situation long, because I believe this is going to go long, what you're going to do, you're going to know that the retail trader is sat with orders right here. Let me just get a little arrow. You're going to know that the retail trader is sat with a long order right here. Okay, let me change that round. So you know retail traders want to sit here and go long, but so do you. So your idea as an institutional trader, you need to fill your orders, guys. You need somebody on the other side of your trade, as do we as retail traders. So what you're looking to do is find the stops of those retail traders, take them out of the trade so you can then push the market in your direction. Well, if you're a retail trader who normally trades at the 61.8, where's your stop going to be? Most retail traders are going to have their stop just below here. In fact, let me get rid of that arrow. Let me not use that. Let me use a different arrow, a different tool here. A lot of retail traders are going to have their stop just below here. Okay? Knowing that, the institution or the institutions or the professional traders are going to want to push price down through your stop, take you out, and then take price in the direction that you were hoping to go for in the first place. It happens all the time, guys, and not only that, they can see where your stops are anyway. They've got an advantage over us. So we've got to be smarter than that. We've got to be a lot smarter than that. So this is how I trade. I'm still a retail trader, okay? But I now unless I see a huge evidence that I need to take a trade at the 61.8, I ignore the 61.8 level. And what I look for is a trade within my zone. Now, what I like about this trade is that just below in the 67.8, excuse me, traders, the 67.8 level is right in that demand area. There's some confluence in there, guys. There's two reasons there why potentially I could take a trade in that area. Now, there's a lot of people that say that Fibonacci doesn't work, and on its own, I agree. But Fibonacci can be a big part of your trading system, and let me just give you an example of how I use it. Now, let me just what I'm going to do here. I'm I'm just going to try and tidy this chart up a little bit. So let me just do what I always do. I put a horizontal line there and a horizontal line on top of the 67.8. If I can, I've bought a new mouse and it's so sensitive, it's unbelievable. But let me just, there we go. Okay, so what I like to do here is get into my template. That's the 61.8 line, which is white, and that is the 67.8 line, which is green. So that just allows me to remove this line. Okay, so there's my 67 and 67.8, 61.8 and 67.8 fib retracements. Now, let's just have a play around with Fibonacci. Now remember, I'm going to fatten this up and move it to, I'm not going to be trading at this line here, this 61.8. I'm looking for price to go down through that. And what I'm actually looking at is price to go down into the 67.8 line and into demand. But guys, I just want to bring your attention to something else. All right. This is why I know that these areas are manipulated. This purple line here, when you're looking at this video or the other videos that I shot back on the 7th of July, I placed this purple line there. This purple line has been there since the 7th of July, guys. We are here as an area that might react in the future. Here we are on the 7th of July. Let me just drop a line in there. Let me just drop a line on top of that purple line. Look at that. Can you see that? Let me just fatten that up. Okay, that's better. So this upper dashed line, in fact, let me just change the colour of it so it stands out a bit more. Let me just change it to yellow. 1 second. Okay. So that yellow line there, look at that, guys. I placed this purple line here, which ends there on the 7th of July, and look what's happened to price. Bosh. Price has gone down into that level, 61.8 fib retracement, and reversed. The old me would have looked at that and thought, damn, I've got to get long this market right here, but I'm not going to get long, guys. I've already said to you what I'm looking for. I've already said to you that I'm looking, I believe this is a manipulation, and I could be wrong. Price could go to the moon from here, and if that's the case, I can get into this trade later on a lower time frame. That again is another lesson altogether. So here I am thinking about this trade, and I know what I'm going to do. I've got a plan. But why this area? Well, this is why I like Fibonacci. Now look at this swing here. Let me just pull this down a bit more. This swing here, this swing, when I say this swing, what I'm talking about is, let me get my arrow. This swing here. Okay, from here to here. I just want you to pay attention to that. And I just want to show you how I play with this tool. I get my fib extension. I go to the high, down to the low, and back down, back up in. Now, look at this. Can you see the one, if you can see the equal legs, okay, and you can also see the 127 fib extension. Let me just pull that up, guys. Look at where that 127 fib extension lines up, this line here. Look at where that lines up. Right on top of or just above the 67.8 retracement in demand. Another piece of evidence. Let me just get rid of that. Remember, we're still on the daily chart. I haven't even started to move down the time frames yet, guys. Okay, so we've just used this swing here. What about this swing here? Let's just see if that has any relevance to that level. From the top, back down in. Okay, so our 127 is just above that level, which is fine because it's just above the zone. The other way that I use Fibonacci, just in case, because remember with this Fibonacci extension, we're measuring this leg and also this swing here and this leg. But the other way you can use this extension is you can go and just measure this leg only. Okay, now what's still amazing is that this 1618 lands right on top of the 61.8 of this massive swing. Guys, this is clockwork. This is amazing, and there's a system within here. But on this, so for that swing, there's nothing there for us. Okay, in this bigger swing. So let's just start working our way down the chart. I'm going to go down to the 4-hour chart, and I'm just going to auto this market. Okay, so here we are at the 61.8 line. Now, I already know what I want to do this trade, but I'm trying to add credence to the level. So let me just squash that up a bit so you can see at the bottom there. And I'm just going to bring this down. That's better. Now, what about this swing here? Does this give us anything? And remember, we're now on the 4-hour chart. Let's just have a look. Okay, guys, 1618 in that area. Okay, all around this little area here is mounting up really, really nicely. Excellent. I'm really liking what I see here. Let me just see, did I miss anything on the daily chart? Let me just have another look at that. No, I don't think I did. Okay, so what's the play? Well, the play is in that 4-hour chart. There's something there that I see that I'm not talking about in this video, guys. And it's something that I look for in every trade that I go into. And it's something that I keep. I don't tell people about this too often, although if you look through my videos, you will see it. If you look long enough, you will see what I'm talking about here. So here's the play. Where if price gets down into this area here, this demand area just above there, I'm going to place an alert. Okay, and I want that to alert me when price is crossing down into that area. Okay, and I also want a message to pop up that says potential buy, check fundamentals. Okay, so there you go, the little orange line just popped up. So basically what's going to happen here, if price gets down there, is I'm going to get an alert, and that alert's going to say to me, check the fundamentals. Now, if the fundamentals haven't changed from my bias now, I'm going to be looking to get long this market, guys. Okay, and this is how I break down the charts over and over and over again. Okay, guys, hope you enjoyed the little presentation there. There's one thing I want to say. Now, under no circumstances is this financial advice. I don't want you to take this trade. I don't want you to listen to what I'm saying here. I just want to show you how I view the markets. It's really important that I tell you that this is not financial advice, and I don't want you to listen to what I'm saying. I'm not licensed by any professional bodies. I'm a retail trader like the rest of you, but this is how I trade the markets, guys. So when I do these little videos where I'm talking about things that may happen, this is just my view of the market. So under no circumstances do you take my advice. So traders, I'm going to leave it there. Thank you for your time. Really hope you enjoy this video, and visit the website, come across, subscribe, press on the bell icon, leave comments, and let's see what we can do here. Traders, thanks for your time again, and I'll speak to you all really, really soon. Take care, traders.